lesson, review of what we traded today about why you have to have big winners. And perfect example, I always tell you guys about slippage that you can't control. On this COH trade this morning, this thing spiked up. I don't know if you can see on the screen here, but this is a minute chart, and this thing spiked from 39.03 to 39.70. And I caught an average of 20 cents slippage on this, okay? And this happened really, really fast. Now, 20-cent slippage, if you're getting gains that are 15 cents and you get to catch 20 or 30 cent slippage, it's going to be kind of hard to come out of the hole, right? Because if you, let's say you're risking 20 cents, you get 20-cent slippage and your gains are only 10 or 20 cents. You got 40 cents loss on this trade, and now you're going to have 3 or 4 gains to make up for this loss, right? Even if you're risking 10 cents, you get 20-cent slippage, you've down 30 cents, you're going to have 2 or 3 gains to come out of the hole. You don't want it to be like that. Now, today I hit 3 trades, and I missed 2. And this was one of my misses. Now, I came back, and we got a really nice fade on this down through here. And I was sized up pretty heavy on the move down. Still ended up down on the trade, on the name overall. But was looking for a break of the lows, had a lot of room, and then the thing rips up here. But again, the key is, this gain right here didn't get me out of the hole.
FCAU.
Right? I caught 50 cents on this move down.
Moving a bit here on some volume.
And it did not get me out of the hole. I only covered half.
Foxtrot Charlie Alpha
right?
uniform.
I only covered half my position. I covered the rest just above 39, which was still in profit. Now, what got me out of the hole, I had a nice trade on UPS. This is a setup that we teach. The day chart was breaking out. There was a lot of chatter going around on it. It had room when we took it to 101.46. 5-minute chart, really nice setup here. Setup was right here, playing the break of this high, and this is one of the times I was only in this trade for about 8 minutes, but played the break up here, and I was buying 170, and then played the break, 180, played the break, and was selling to about 101.50, 101.40s really, 101 to the mid 101.40s. So still caught about 60 cents on this trade, and that's a good decent gain. But my big winner, where I made most of my money, was Apple, AAPL. Now, I was initially going to try to hold this all day, and when it started kind of teetering out around here, around 133, and it just looked like it was going to start rolling over, I thought it was going to pull back to 132 and bounce, but nonetheless, I sold my position at 133, 132.70s. But the thing is, I was
DGLY, Digital Ally, at the highs now, Delta Golf Lima Yankee.
Buying down here, bought the break of this high right here as it was flagging.
Shares of Twitter extremely
sold half
volatile
into this
here
pop,
on very heavy volume. Tango, Whiskey, Tango, Romeo, ahead of earnings.
I thought for sure this thing was going to run to the high of the day. But that's the thing. If it starts jacking around, as soon as it started jacking around right here, I went ahead and bailed. And that's a huge gain. The standard ATR
shares of Twitter now are spiking lower on heavy volume. TWTR.
Have it over here.
Maybe earnings are out on
So the standard
Twitter.
ATR on Apple, it's going to be a little higher today with earnings, but let's say yesterday is normally $2, so you're catching almost the entire ATR on this trade, just on one trade, catching almost the entire trading range. And that's the key. You want to try to get those big gains, because if you don't have the big gains, I would rather be risking 40 cents for $1 than be risking 10 cents for. So again, hear me out here. I'd rather be risking 40 cents for $1 than be risking 10 cents for 30 cents. And why would I rather risk 40 cents for $1 than 10 cents for 30 cents? Because that 10 cents could have 20 cents, 15 cent slippage, and now, because of the slippage, it's a complete wash. Even though my risk reward
numbers here on Twitter, 7 cents versus the 4 cent.
It's got to at least be set up to get that, or I won't take
estimate.
The trade. Don't always get it.
Revenue missing.
Takes profits early and that kind of thing.
436 million versus 456 million on Twitter.
I'm telling you guys, if you're playing for 15 or 20 cents, you're playing the wrong game, because that is gonna cost you in slippage alone. You get a couple of trades of slippage, you'll see what I'm talking about. The market starts trading kind of thin. Things aren't bidding really thick. there's going to be some slippage in those period of time. And right now, the market's trading. The last 2 days have been kind of choppy. Friday, even though I was red, I should have been way green. Same thing Thursday, I was up a little bit. I should have been way green on those days. I thought last week the trading was beautiful. Today the trading was okay.
Shares of Twitter
trading was terrible. There wasn't
now at 5074 as
the
earnings apparently.
33% of the S&P reports this week, so there's going to be plenty of opportunity. But again, the key is I always try to tell you guys, whether you remember or not, I want you to understand you got to learn how to get those big gains. That's the key to being a successful trader day in and day out. Hopefully we'll see you in the room tomorrow.